Good morning, ladies and gentlemen. My name is Dereck Blair, and this is Caprock Wealth and Wellness. This is the Caprock blueprint to a richer, more balanced life. And I just want to say good morning, post-celebration day, post-Independence Day. I hope everybody had a great day yesterday. I know we had a great time, got to spend some time with family and friends. And man, just what a beautiful day to celebrate our country, our freedom, our independence, and basically what this country stands for. So I hope everybody had a great day. And I want to thank you for joining us this morning. If you have any questions, reach out to us, 806-749-7870. You can visit our website at caprockfinancialgroup.com. But again, thank you all for joining us this morning. So what is Independence Day in the United States? It's celebrated on July 4th. It marks the anniversary of the adoption of the Declaration of Independence in 1776, when the 13 American colonies declared freedom from British rule. And yesterday across the country, Americans gathered with friends and family to celebrate freedom. But Independence Day is more than fireworks and flag waving. And as Thomas Jefferson once said, I prefer dangerous freedom over peaceful slavery. So what does Independence Day mean for us historically? This is a celebration of freedoms, of self-governance, and the birth of a new nation, and a beautiful nation, the most free nation in the world. The Declaration of Independence asserted our right to life, liberty, and the pursuit of happiness, and it symbolized a bold stand against oppression and the desire for self-determination. And what does it mean to us personally? A reminder that freedom isn't free, and it takes courage, planning, and sacrifice. It is a celebration of American values: liberty, justice, opportunity, and personal responsibility. We have to take it upon ourselves to look out for ourselves, look out for our families, and look out for each other. And this is a perfect time to let us reflect on our own lives and ask, am I living free? And when I talk about freedom, I'm talking about financial freedom. So as we celebrate yesterday's July 4th and the birth of our nation's independence, today we're going to talk about a different type of freedom. And July 5th is a good time to call it Financial Freedom Day. July 5th is, what is your personal freedom? And that's what we're going to talk about today. So I appreciate you joining us. So what is financial freedom? What does it mean? Financial freedom is different to everybody. It's different to individuals. It's different to couple. But what is financial freedom? And the way we look at it is, it's not about being rich. It's about having choice. It's about having peace of mind and control. So what is the choice? The choice is, when do I want to retire? When do I get to retire? What do I want to do in retirement? Do I want to work again? Do I want to be able to stay at home? What do I want to do? What are my goals? A big one is peace of mind. Everybody in retirement has a different peace of mind, or going into retirement has a different peace of mind. For me and my wife, we're completely different. For her, security and my security is two different things. And that's what we see a lot of the times with our different couples that come in, are peace of mind, security mean different things for different people. And then control. What is control? Am I living in a controlled environment where I know exactly what's happening, or is it changing from day to day, month to month? Or do I have a peace of mind that I'm going to be able to move forward and I know that my finances are in control? Let's talk about the difference between retired and independent. This is a big one for us, because on our income optimization, our first step in the 8 elements, when we talk about the 8 elements of financial control, we talk about income optimization. Income optimization is a desired retirement. So when we look at retired, basically that means, okay, I've retired, I've stopped working, I'm going to rely on my Social Security, I'm going to go to turn it on. If I have any assets, I might have to use them, I'm going to pull from them, and that's what I'm going to live on. I'm going to live a basic retirement. I'm not going to be able to go and do the things I want. And you often wonder, and we hear this story a lot, and we get this question all the time, is my money going to last? Am I going to have enough to live? Well, that's a tough question, because we're living longer than ever before. Through medical breakthroughs, through science, people are just healthier, and we're living longer than ever before. We were blessed last week. My wife and I went down to Miami for a big meeting, $1 million roundtable, and we spent some time down there, spending a couple of days just cruising the town, seeing what all was out there. And it's very interesting, the lifestyle that they lived down there, how active it was. We saw people riding their bikes, they're walking, they're doing some hiking. It was just real interesting to see the ages down there, that there was a lot of older people down there exercising and taking care of themselves. And so what does that mean for people that are on a fixed budget, that my money has to last us. I only have so much in a 401k or an IRA, and this money has to last me the rest of my life. And so kind of what we look at is financial independence. Am I living the way I want to live? Am I enjoying it the way I want to? And retirement is a status. This is based on age or work history. If I turn 65 and everybody at the job says I need to retire and that's what I think I need to do, that's what I do. But is that what needs to be done for you? And everybody has a different age for retirement. We have some people that want to retire at 55. We have some people that want to retire at 65. And then I have some people, I was on the plane and visited with a guy who was 74 and had no plans of slowing down. He loved his job. He loved what he did. And he just wants to keep going. So at 74, he's still active. It keeps his mind sharp. He has no plans on retirement. And that's great. That's what he loves to do. There's nothing wrong with that. So, and then you look at retired versus independent. Independent is you choose how you spend your time. Do you want to work or not? There was a gentleman down at the hotel that was kind of I forgot what they're called, but basically they're helping you at the hotel. They give you some locations, different things like that. We got to talking to him about where to go eat and start talking about his retirement. He'd been retired for about 4 years, and basically he got bored. He was just super bored with his retirement, didn't know what to do. So he went back to work for this hotel and absolutely loves it. He works about 3.5 days a week. He gets to pick and choose when he wants to work. And it's his choice to go back to work. And we see that a lot. We see it a lot where people work 30 or 40 years and they go to retire and they really don't know what they want to do. They don't have a hobby, or they're not going to be, their time's going to get bored. And so they choose to go back to work. And it's a completely different situation when you choose to go back to work versus I have to go back to work. And we see that all the time. There's nothing wrong with maybe volunteering or working part-time if you choose to do that, rather than if you have to do that. And that's what independence gives us when it comes to financial planning is I get to choose what I want to do when I retire. Do you have enough assets, income streams, and are you planning to live the life on your terms? Do you get to choose what you want to do? We have a lot of our clients that have season tech tickets. They live and breathe through Texas Tech sports, and it's awesome because that's what they choose to do. Every Saturday, whether the football game's here or away, they're attending those games. Basketball, they're attending those games. And so being able to buy season tickets is a choice. Being able to go to these games is a choice. If you have kids or grandkids that are still playing sports in high school, heck, those things become pretty expensive. But it's a matter of choosing what I get to do when I want to do it, and not being able to say yes to things, not having to say no every time. And then you're not dependent on one check, the market, or one employer. Independence to us is talking about I am not dependent on that Social Security check coming in. I want to be able to have multiple income streams. I know what that income is going to be, and I'm going to be comfortable. And independent is a mindset. It's based on control and confidence. Have I built a financial plan that gives me the independence that I want? Do I have that security built into my financial plan that I'm going to be able to go enjoy and have a desired retirement, enjoy in a desired lifestyle that I can live the way I want to, whether that's kids and grandkids, whether that's traveling. And that's the neat part about what we do is we get to help people build these things. So there is a big difference between being retired and being independent. Retired means you stop working. Independent means you have choices. You're not just hoping the money lasts, you know it will. And that's what true financial freedom looks like. So when we talk about, again, talking about financial freedom it's a choice of what you want. So when we talk about retirement, we talk about financial planning. We look back and there's 5 pillars of financial independence. When we did some research, these are the 5 that kept coming up over and over again. And we're going to break these into 5 quick practical pillars, and we want to talk about those a little bit more in depth. Let's take a minute break. We're going to come right back, and we're going to jump into the 5 pillars of financial freedom. Welcome back. This is Caprock Wealth and Wellness, the Caprock blueprint to a richer, more balanced life. So we were jumping into the 5 pillars of financial independence. Okay, these are 5 quick practical pillars that we want to talk about and kind of dive deep into. Number 1 is income independence. Income independence is by far the most important one. We call it income optimization in our 8 elements of financial control. And why is that so important? Because it's the number for income is different for everybody. We work with some people that are comfortable $3,500 to $4,000 a month. They have no debt. They're comfortable. That's the life they've lived. I have other people that live on $25,000 to $30,000 a month, and that's what they want. That's how they desired retirement. That's how they live their life, and that's what they want to continue living on. And when it comes to financial independence, or income independence, there's no right or wrong answer because it's different for everybody. And I think that's a frustrating part of what I see a lot of when it comes to the social media and it comes to different aspects of the news that you watch sometimes when you see companies say, well, if you have $1 million or you have $5 million, you can come see us and you can retire successfully. That number's different for everybody. I had a couple in here about 2 weeks ago. They had about $400,000 to $500,000 in a 401k. They had worked hard their whole lives. They had no debt. This couple was going to receive more in income in retirement than they were while they were working, and they had no idea. So when they go to retire next year, they're getting a pay raise. You talk about a happy couple. When they realize that they're going to have more money in retirement than what they do working, they're not going to have the transportation bills. They're not going to have some things that they're having to pay for now because they're going to be able to get rid of a couple of vehicles. That's a super excited couple. So never is it one of those situations where you have to have $1 million to retire. You have to have $5. That doesn't make sense, and that doesn't work in the real world. And if someone's being a true fiduciary and they're putting a client's needs ahead of their own, they should be able to help those kind of people. We're blessed because we get to work with people that have $100,000 in a 401k, and we help people that have $10 and $15 million in their 401k. And that's the best part of my job, is putting the plan and the puzzle together of what is the income independence for you. It's different for everybody. Heck, it's different for me and my wife. What I think income-wise we're fine on, my wife has a different number. There's nothing wrong with that. But it comes down to turning on Social Security at the correct time, making sure you do your analysis of when is the best time to turn on Social Security. Do you receive a pension? If you take a pension, what's the best way to turn it on? Because there's several different options. And then when it comes to your assets, what's the best way to take those? If you're risk averse and you don't like the market, maybe an annuity is the right situation for you. Maybe it's not, but an annuity sometimes can bring a guaranteed income to an individual, to a couple, and it can be a paycheck for life. I mention annuities a lot because we do annuities, but not everybody deserves one. Not everybody needs one because an annuity has to be the right fit for that person or couple. The annuity companies have gotten very smart about how they've built their annuities, and a lot of the ones we do now are, let's say that the gentleman, the husband, has a 401k, has an IRA. The wife might have stayed at home. She might have raised the kids, a harder job than what the husband had, honestly. But it's even though that account's in that husband's name, if something happens to him, that wife will still receive that income. That payout will still continue for the rest of her life. And that is what an annuity is when it's done correctly. And our point of view is it's going to be a paycheck for life. Is basically you're buying a pension that is going to be a paycheck for me or my spouse for the rest of our lives. As long as one of us are alive, we're still going to receive that income. And then if something happens to the both of us, whatever's left in that balance will go to the children. So it's the companies have changed so much that on our income streams, when we're able to use annuities in the right situation, we're going to be able to protect that spouse. And that goes into the revenue replacer of protecting the surviving spouse. But at the same time, the annuity companies have also gotten smart about inflation protection. So most of my annuities that we use nowadays, they grow when the market grows. If there's a cost of living adjustment, they get a pay raise. If the market gives them some growth for that year, they're going to get a pay raise. So it competes with inflation. So when it comes to income, sometimes an annuity is a really, really smart choice in the right situation. Now, all types of annuities out there, you got to know the ins and outs of what kind of annuity you're looking at and what they're trying to sell you. So you want to make sure you do your homework on that annuity and that company that's providing that annuity and make sure it's going to be the right one for you. The second pillar of financial independence is emergency readiness. This is a tough one because we truly believe you have to have emergency money set aside. Now, this money could be earning interest. It could be in a CD. It could be in a savings account, money market. It could be in the market if that's what you choose to do, but it might be in a little bit more conservative investment. But the important part about that is bad things happen to good people. They just do. Bad things happen to good people, whether it's, tires, air conditioner. A lot of what we're seeing right now with our home and auto insurance, with the 2 to 3% deductibles now, you're having to come out of pocket, for $15,000 to $20,000 for a new roof. Where is that money coming from? If you're living on a fixed budget, if you have a certain standard of living and that's what you're comfortable, and all of a sudden you're having to come up with so much money for a roof, where's that money going to come from? And is that going to change your lifestyle that you're not able to go and do as you wanted to? So we truly believe that having money set aside, whether it's a 3-month a salary, 6-month salary, 9-month salary, that's great. We really, really want you to do that because you have to have money set aside when bad things happen. A minor deal on that, me and my wife were trying to come back this week. We woke up, we're supposed to fly out at 4:00 on Saturday. We're supposed to fly out 4:00 on Saturday. American Airlines calls us or sends us a text 9 a.m. that morning and says your flight's been canceled. So we, hop on the phone with them, said, what's going on? They said, all flights are canceled. We'll try to get you out on Monday. Well, that's not a possibility. We got to be back Monday. We have kids and everything. So what do? We have to go to another airline. We jump on Southwest. Well, those are expenses we weren't expecting, but that was something that was out of our control. So having money set aside so when these things happen, you're going to be prepared. And that's basically what it was. And we weren't the only ones scrambling. That airport was crazy because everybody's scrambling to try to catch a flight. But the point is, bad things happen to good people, and it's when we least expect it. So we truly, truly believe that emergency readiness is number 2 on our 8 elements of financial control. And it's really important that you have a handle on that. You have some money set aside. One of the things that I've also done here at Caprock is we get a lot of younger people that come in that they're ready to start investing. That's real important. I'm ready. I got a new job. I'm ready. And my first question to them is, what kind of savings do you have? What kind of money do you have set aside? And 9 times out of 10, they haven't started a savings. And so what I try to do here is I want them to be disciplined. I want them to start putting money aside every month for about 4 to 6 months and start building that savings so that if something happens, they're going to be okay. And then once we see that discipline that they can do that, then we open our doors to say, okay, how can we work together? And the sad part about that is a lot of the times they don't come back because they don't put that money aside. They're not worried about building that savings. They're worried about starting to invest. And I truly believe from what I've seen in this business for 13 years, it is so important that you're building that nest egg, you're building a safety net, that you're going to have some money set aside so when things happen, you're going to be okay. The third pillar is debt freedom. This is independence from banks and interest. Now, there is good debt and there's bad debt. And you got to know how that debt works for you. We see it all the time where people are financed to the hilt. They have a new house, they have a brand new pickup, but they're financed to the hilt. They're just strapped to that monthly payment. You're seeing a lot of these, I'm curious about this. You're seeing a lot of these new houses pop up all around the area, New Home, Lubbock, Shallow Water. You're seeing some of these houses. And my question is, are these people, are they leveraged out? Are they financed to the hilt where they're making that house payment so much they can't enjoy their life? And so it's important that you have control of what is your debt. What kind of debt do you have? Are you in control of it? Me and my wife, we're big believers in what we do is we use the reward credit cards. I have one with Southwest. I have one with Hilton. And we use those things all the time to pay for our normal bills, to pay for things in the company. And we pay them right back because we're able to get those rewards. So when we take a trip, we're going to be able to use those rewards, but we're using those credit cards carefully because we want the rewards. Those are good for us, and we're able to travel that way with our family, and it doesn't cost as much in the end. So it's just important that you know what is my debt. Is there good debt? Is there bad debt? How am I using my debt? If I'm financed to the hilt, I'm not able to build anything for myself. It might be time to get control of that. It might be time to talk to a debt coach and say, okay, I need to put a plan together. I got to get back on track. So it's just real important that you know, is this something that I need to go buy? Is this something I need to finance? A lot of the times what we encourage our people to do if they're having a question is sleep on it. Take 24 to 48 hours and really analyze the pros and cons. Because 9 times out of 10, when you wake up that next day, maybe you realize, hey, this might not be the right purchase for us. So when it comes to having to buy stuff, is it something I need? Is it something I want? And what kind of debt is this going to put me in? So you really want to be debt freedom. You don't want that hanging over you. It's a wonderful thing that when we build a financial plan and we have couples that, well, I've paid off my house. I have no vehicle payment. The only bills I have are my utilities. Okay, so you're looking at $1,000 to $1,500, maybe $2,000 at the most. It's going to pay all your taxes, your utilities, your cell phone. All of a sudden, that's a different lifestyle for them in retirement because they don't have these heavy debts. Just recently had a couple out of Amarillo walking into retirement. He was retiring in about 6 months. And about 6 months ago, 5 to 6 months ago, they moved into a brand new house. They started those terms all over again. And when it came time to put that financial plan together, I couldn't make it work. I couldn't make the numbers make sense that they were going to be comfortable because they had financed that house for so much into retirement. They were no longer going to have these large salaries that their lifestyle was going to be so different. And so you have to be aware of these things as I'm walking into retirement, as I'm a retiree, what's going to be best for my money? What's the best way to make this work? The fourth pillar is legacy control. This is a big one for us is because how do we want to leave a legacy? Is it important? And I always ask the question of leaving a legacy. Do you want to leave a legacy when you pass away? Do you want to leave something to the children, the beneficiaries? Or do you want to make memories now? Do you want to build those legacy memories now? And for everybody, it's a different situation. Everybody has a different point of view. I got a wonderful couple that we started working with about a year ago, and they have a granddaughter. She was premature, and she is the apple of their eye. They absolutely love her to death. And so one of their things and one of their most pressing issues was as we built their retirement plan is we want to make sure we're leaving her as much as we can. We're enjoying her now. We want to take trips with her now. She's the blessing of our life. And so when we built that plan for this couple, it was with the granddaughter involved. That she's the main pillar. And it was a wonderful plan. It was a great plan to work with these people because they were so excited about being able to leave something from her. So they're going to be able to enjoy their life the way they want to. I think in a matter of about a month, they're headed up to Sturgis. That's their big once-a-year trip. They're going to go up there and have a blast. But the main thing is I want to take care of my daughter. And then other situations, my granddaughter. And then other situations is people say, you know what? I put them through school. I helped them. I've given them everything. I want to spend every bit of my money. And there's nothing wrong with that either. Everybody's different. And so, for me and my wife, we recently had about 15 months ago, we had a granddaughter. Our daughter had her daughter, and absolutely gorgeous. She's just the sweetest little thing in the world. That's why I was late to work this morning because she came over to the house and we were feeding her pancakes. But our legacy now with that granddaughter has changed of kind of what we want to do. But at the same time, now we have our oldest daughter who's about to go to CRNA school. She's worked as a nurse for the last 6 years. She's got her degree. She's put the work in, and now she has an opportunity to go to CRNA school. Well, for us, that's going to be building a legacy now that we can help her out a little bit. Why do I want to build all this money up for my retirement and then pass it down when I leave when I have an opportunity to help my daughter now in CRNA school? So everybody's needs and their desire for legacy is different. And there's no right or wrong answer. This can't be blanket coverage for anything that everybody deserves to go in the same place because it's different for everybody. And then the last pillar, and to me, one of the most important that we really have to dive deep is tax planning. Basically reducing what you owe, keeping more of what you earn. We do a lot of conversions here at Caprock Financial Group. And so what is a conversion? So we look at it that if someone has qualified money, they have a 401k, they have an IRA. Qualified money is money that I have not paid taxes on yet. I still have a silent partner, which is the IRS. And so I still owe my silent partner his part of the money. And if this is money, and let's say you have $500,000 and you're going to use $250 of it, that's built in for income, and you got another $250 we might need for legacy. We want to pass this down to our beneficiaries. What we look into is the tax play of what are our RMDs going to be. So what the government says, what the IRS says is you have this qualified money, and at a certain age, whether it be 73, whether it be 75, you're going to start taking a required minimum distribution, and you're going to take a certain percentage of that money because we want to collect our taxes. We're partners in this, you and the IRS, and they want to start collecting their taxes. So at that certain age, you're going to start taking money, whether you need it or not, and you're going to start passing that money, tax money, over to the IRS. Well, you have a couple of options when you start to do that. You can either reinvest that money, possibly pay taxes on it again, or you can invest it in a tax-free vehicle. So what we try to do here at Caprock Financial Group is we look at it now that we're in a controlled tax environment. So Right now, we're talking about the big, beautiful bill. We know what the taxes are right now. If they don't pass this big, beautiful bill, then all of a sudden you're looking at some increased tax rates. So we are in a controlled tax environment as of right now. So what we look at is, does it make sense to start converting some of that money from the 500,000 that I used as an example, so 250, do we start converting that money over now in a controlled environment over to a tax-free vehicle? Now, tax-free vehicle could be a Roth IRA, IUL, Index Universal Life Insurance, that are tax-free vehicles. So what is a tax-free vehicle? A tax-free vehicle means that I've put my money in after taxes. It's going to grow tax-free, and when it comes out to myself or my beneficiaries, it's tax-free. So for example, on a life insurance, if I'm putting in, let's use a number of, I do $50,000 a year for 5 years. I'm putting in $250,000 for 5 years. Well, that death benefit could be anywhere from $700,000 to $1 million, 100% tax-free. So if I could pass my beneficiaries on a tax-free vehicle rather than a taxable vehicle, am I doing right by them? I believe so. Now, this might not be a fit for everybody, but in certain situations, when we can go to a tax-free vehicle, we're going to do it all day because we're taking care of our taxes. We're getting the IRS out of our pocket, and we're looking to pass our money down tax-free. At the same time, if we're using some type of vehicle like an IUL, an Index Universal Life Insurance, it's going to offer you three things. Number one, it gives you that leveraged out death benefit that's tax-free. It's also going to build cash value inside of the policy, that cash value, if you need that money, if you want to take an income from that money, it's 100% tax-free because you're borrowing your own money. It's taking a loan against it, tax code 7702. But then the third part of it is, on your leveraged out death benefit, on most companies we use, that death benefit can also be a long-term care benefit. So I'm a big fan of receiving something that I'm not having to pay for. So if there is a 74% chance a healthy person needs long-term care and they have an IUL, that long-term care is there if they need it. They're not having to pay extra for it. They're not having to go buy a different policy. They're not having to worry about the policy go away. If they need long-term care, they have it. If they don't, wonderful. That death benefit passes to the beneficiaries 100% tax-free. So those are the 5 pillars of financial independence. So my question to you is, are you financially independent? Excuse me. Are you financially independent? Can you choose how and when to spend your time? Can your lifestyle continue if the market drops? How many people, when the market dropped at the first of the year, got emotional? And all of a sudden we get a little stressed and we start taking out a little less money because we see what the market's doing. Are your income sources protected? And do you feel confident in your plan, or are you just hopeful? Do you have confidence moving forward that I know when I go to retire, I'm going to be comfortable? That's the main key. So as we wrap this up today, I do want to invite you July 15th, 6 p.m. at Harrigan's. We are doing a financial seminar. We provide dinner. I get up and speak for about 40 minutes, and we hit some of these key points. And it's just we've gotten a lot of positive feedback on our seminars. I try to break it down. And my goal is that when someone leaves there, they're leaving with something tangible that they can put into effect and they can use it. So we'd love to have you July 15th, 6 p.m. at Harrigan's. If you'd like to register that, please call our office, 806-749-7870. Again, this is Caprock Financial Group, and this show is Caprock Wealth and Wellness. This is the Caprock Blueprint to a richer, more balanced life. I hope everybody has a wonderful Saturday. I hope you had a great day yesterday, and just go enjoy your weekend and just be thankful for what this country provides. And I wish everybody the best, and I look forward to talking to you next week.